Hello and welcome to another lecture on basic macroeconomics. Today it is our lecture number 9 on basic macroeconomics, and in the circular flow of income we are going to study the three sector model. Now before this we have already discussed the two sector model in which we try to understand the relationship between the household sector and the business sector or the firms, and we saw how these two sectors are related with each other and how through different variables they are connected to each other, and how circular flow of income in the real sense and in the money sense takes place between them. Now today we are going to introduce the government sector, and we will see how this is going to modify our two sector model and what sort of changes it's going to bring to the circular flow of income that we have already learned in the two sector model. However, to understand the modifications in the two sector model, we have to first revisit our two sector model briefly. We will remake it here. So this is our business sector. It produces goods and services which pass through the product market, and they move on to the household sector where they are consumed to satisfy the wants of the household sector. And then the household sector, obviously it has to make payment for the goods and services that it utilizes or consumes, and through product market where it purchases the goods and services, it makes payment which goes to the money goes to the business sector. Now on the other hand, you can see the household sector which owns the factors of production. They give factors of production or they sell their factors of production in the factor market, and these are purchased by the business sector for to produce goods and services, and in return the business sector makes payment which we call as factor payment, and that factor payment goes from the factor market to the household sector. Now this is our simple two sector model, and we see in this that the inner circle, the inner flow is the real flow and the outer flow is the nominal flow, and we can understand the direction of these two flows is opposite to each other. The inner flow takes place, the flow of goods and services, and the flow of the factor services takes a clockwise direction, while as that of money or nominal flow is in anti-clockwise direction, so they move in opposite directions. Now you can add here the capital market, which plays the role of channelizing the savings made by the household sector, and they channelize these savings towards the business sector where these savings are converted into investment by the business sector, and these are the things that we have already learned in the last lecture. Now one important thing that we need to keep in mind in the case of the two sector model is that the total expenditure or the total demand in the two sector model has got two components. One component is the demand by the household sector, so this is what we call as consumption expenditure, and the second component of the total expenditure in the two sector model is the investment expenditure, and investment expenditure is incurred by the business sector to make its investment. It has to purchase goods, and those goods which are actually produced by the business sector itself. So some firms create demand for other firms when they go for investment. So you need to keep this thing in mind, that investment is an important component of the overall demand or overall expenditure in an economy. So I hope that these things are clear, that in two sector model we have two components of the total expenditure or demand. One is the consumption expenditure, which is by the household sector, and the second is the investment expenditure, which is by the no business sector, or which is by the firms or the productive sector. Now let us move ahead to the three sector model, and let us see how this two sector model is actually transformed when we incorporate the government sector. Now first, let us again rebuild the two sector model. Now this is our business sector producing goods and services, and through product market they move to the household sector, and household sector providing good factor services to the business sector. Now this is the real flow that we are conversant with, and the money moves from the household sector to the through the product market to the business sector, and from business sector because they have to pay for the factor services, so through factor market to the household sector. Now this is the two sector model. Again, you can add capital market over here, which channelizes, which diverts savings to investment by playing a critical role in the two sector model. Now we have now brought in the government sector, and we have to focus on the relationship of the government sector and household sector, and of government sector and the business sector. So one relationship between household sector and the government sector is that the household sector makes payment or payments towards the government sector, and the reason for this is the household sector has to pay taxes. It has to pay taxes, and mostly direct taxes, and then non-tax payments are also made by the household sector when different things are registered with the government, or some fines are paid at times. So that very money moves to the government sector, obviously. So money flows from the household sector to the government sector, and it is very important to keep in mind. Now let's also focus on whether business sector also makes payment towards the government sector. Yes, business sector also does make payment towards the government sector. That is, money flows from business sector to the government sector. Again, they pay taxes, and non-tax payments are paid by the business sector towards government sector. Again, they pay taxes, mostly indirect taxes, and then they also have to pay non-tax money also towards government in for example, in case of registration of things, or while paying fines towards the government, so on and so forth. So this relationship of flow of money from business sector to the government sector is one critical one in this case. Now there is other relationship between government sector and household sector. That is, the government sector makes payment towards what? Towards the household sector, or we can say there is flow of money from government sector towards the household sector. Now what are the reasons for this? See, a lot of people work who actually belong to the household sector. They work in different government departments, in administration, in police, in defense, in education, in health departments, so on and so forth. So these people receive, we can say, wages or salaries from their government. So money flows from the government sector to the household sector. One more source of income for the household sector from the government sector, that is, when money flows from the government sector to the household sector, is when government is making transfer payments. Now transfer payments are unilateral payments from government towards some people in the household sector. For example, senior citizens, or old age people, or unemployed youth, or widows. So money is given by the government without anything being done by these people in return for the government, so that they can run their life. So This is transfer payment which the government makes towards the household sector. So these are important, sources of income for the household sector, and this is how money flows from the government sector towards the household sector. Now, in case of the government and business sector relationship, again, such a relation exists, that is where money flows from the government sector towards the business sector, and this has got again two major components. One is when government purchases commodities or goods from the business sector, so it's making purchases, and when it makes purchases from the business sector, obviously it has to make payments, because government has to run a lot of departments. It gets engaged in a lot of activities which require no final goods and services which may be taken from the business sector, and therefore government has to make payment for that, the goods availed from the business sector. So obviously money flows from the government sector to the business sector. Another source of flow of funds from government sector to the business sector is subsidies. So governments at times provide subsidies to the business sector for production, and these are very famous, particularly for example, the agriculture subsidies or subsidies in agriculture sector or even industrial sector, so on and so forth. So the point here is that the funds flow from government sector to the business sector. Now this completes our three sector model, and this shows us how money is flowing or goods and services are flowing between these three sectors. The We have the business sector, we have the household sector, and then we have the government sector. Now we need to focus on each of these sectors and some important components related with some important factors related with these three sectors separately, and understanding those things is quite important for us to understand the functioning of the macro economy. Now the first thing that we need to keep in mind in this case is that the demand, I said earlier, total demand or total expenditure, total demand or total expenditure in two sector model comprises two, it is based on two components. It has two components. One is consumption expenditure and the second is investment expenditure. Now you have to add one more source of expenditure, and that is government expenditure. That is whatever the business sector is producing, it has got three sources of demand. One source of demand is the household sector, which purchases goods from the product market. One more source is the business sector itself. Some firms become source of demand for other firms because they have to make investment. Therefore this becomes one source of demand, and then there is one more source of demand, and that is the government sector, because government sector also needs goods which they have to use to run the government, to run different departments. So this thing needs to be kept in mind, that total demand or total expenditure has got three components in this case: the consumption expenditure on part of the households, the investment expenditure on part of the business sector, and the government expenditure on part of the government. This is the total demand in an economy. Another important thing that we need to keep in mind is national income. So when we talk about the income received by the household sector, again it has got three sources. One is the factor payments they receive, because they give factor services to the business sector, but business sector obviously has to make a factor payment. So this is one source for what? For the household sector. The other source for the household sector for the income of an economy is salaries and wages, that we have already talked about. We have already taken up earlier. So this is another source of income for the household sector or income of an economy. And the third source is the transfer payments that we already talked about earlier. So these are three sources of income, or we can say national income in an economy. So you have factor payments, you have wages and salaries on part of the government. Now this is on part of the business sector, and then you have transfer payments on part of the government. So these are two by the government sector, and this one is by the business sector. So again, this needs to be kept in mind to understand how the how a macro economy functions. One more point that we need to keep in mind is that when the household sector receives income, the household sector receives income, where this income goes, what are the ways in which the income is spent. Now there are again three ways in which income is spent. One is it is spent on consumption, which we call as consumption expenditure, and then it goes to the business sector. The second is that some part of it is saved, and that very saved through capital market moves to the business sector again for investment. And third part of our income is given to the government for, we can say, taxes. So we are having three ways in which or three components in which our total income is distributed. So income is distributed in three components. We say consumption expenditure, second is saving, and third is taxes. And again, this is very important for us to keep in mind. Then one more thing that we need to keep in mind about the government sector is what are the sources of revenue and expenditure for the government sector. Now let us first talk about the revenue side of the government. The revenue for the government comes from the household sector. Obviously they have to pay taxes and obviously non-tax payments as well. Then another source for the government is what? It is the business sector, which again pays taxes. Now here we need to keep in mind that the taxes mostly will be direct taxes, and from the business sector side it will be indirect taxes. So these taxes and non-tax payments become source of revenue for the government. And if we look at the now expenditure side of the business sector of the government sector expenditure side, then government makes expenditure towards what? Towards the household sector in the form of salaries and wages, then in the form of what we call as transfer payments. And government also makes expenditure towards what? Towards the business sector in the form of government expenditure on goods, and plus then subsidies that are provided by the government. So this also needs to be kept in mind with regard to the government sector. What are its main sources of revenue, and where does this what are its main forms of expenditure? Now, one final point that we need to keep in mind with regard to the three sector model circular flow of income is how do we measure national income? National income. Now, we saw in the two sector model there are three ways of measuring national income. One is expenditure method, in which we see what are the total sources of expenditure in an economy. Now in this case we saw that there are three main sources or forms of expenditure. One is the consumption expenditure, the second one is the investment expenditure, and the third one is the expenditure incurred by the government sector for purchase of goods that are produced in the business sector or that are produced in forms of an economy. So we can say that the expenditure method will have three components to be incorporated. One is consumption expenditure, investment expenditure, and the third one is government expenditure. So this is one method that we need to keep in mind. The second method is what we call as product method. Okay, product method. So in this, what we do is that we see the total amount of goods and services produced in an economy. Then we find their money value or monetary value of the total amount of goods and services produced in an economy, and that is what we call as now the product method. And in this case, we have to focus on the product market, whatever is produced by the business sector. So that also needs to be kept in mind. The third approach is what we call as income approach, and in this we try to understand what are the various sources of income for the household sector. Now again, we have to keep there are three components of this total income in the three sector model. One is the factor income received from the factor market, which is actually given by the business sector. So one is factor income or factor payment made by the from the factor market. The next is what salaries and wages paid by the government to run its administration, defense, and then other departments. And the third one is transfer payment. So you can say that it is factor payment, then plus wages and salaries, and then it is transfer payment. Now this one is provided by the business sector, and these two are provided by what? These two are provided by the government sector. And this completes our discussion on the three sector model. I hope that you have understood the things that we need to be aware about in the three sector model, how the flows occur, financial or money flows and real flows, and what are different types of relationships between the three sectors with each other. And obviously we have already discussed the role of capital market. It is we keep it very simple, that is household sector make savings, and those savings are channelized by the business capital market towards the business sector, and they become investment in the business sector. Do subscribe to my YouTube channel, Nest Economics. Thank you very much.